Gold prices continue to hold a bullish momentum despite a trade off the recent highs. Recall gold prices trading near, well below 1,200, down near 1,180. We saw that big move a few weeks ago, back up north of 1,200 and actually north of 1,225 into the 1,230s. And then we've seen a modest pullback. And I think today's dollar pullback was more dollar related than it was demand related for gold, or likewise uncertainty that remains out in the wide world of whatever. Gold prices have just seen maybe some longs taking profit. Maybe there's just been some repositioning. I think ultimately right now we've held our bullish sentiment. And if you look, it's waiting for that next it moment, very similar to what we're seeing in the bond market. It just hasn't been doing it for as long. So right now, technically, we're kind of hovering at 1225. That's going to be the it level. If we see a strong Friday GDP number, you're probably going to see gold prices come off. Likewise, if you see a weaker number with more uncertainty, maybe out of Europe, with more uncertainty in trade, you're going to see gold prices continue to uptick. I do think downticks at this point are limited. You will see spec longs look to get out. We'll talk about that in a moment. But I think that right now, technically speaking, it's waiting for a catalyst moment, and that could come as soon as Friday. And if you look at the dollar, as previously mentioned, yes, the dollar was strong today, went out on the highs. Maybe more reflection of weakness other areas and other currencies, but certainly did not help gold prices today. Let's not forget, though, that gold and the dollar have been kind of trading off track from each other as of late. So to say that gold goes down one day and dollars up doesn't mean we're back on track. I think right now that may have aided a little bit in today's downtick in gold, but certainly not the big macro picture. And lastly, let's look at positioning. We've been talking about spec shorts kind of controlling the market. Well, that changed very quickly last week, as now we are back to spec longs, and it was the biggest week over week long initiation going back over 20 years. So right now, gold is, you've got the spec longs in there controlling gold. I think as long as they're going to hold on to those longs, the market needs to stay somewhere around 1225 or above it, keep that positive momentum. But again, if that news comes in and suggests that rates are going to go up again, or that maybe some of the uncertainties in the world aren't so uncertain, you could start to see gold prices fall very quickly. So right now, speculators, which were holding shorts, are now holding longs, and it was a big move made last week. So right now, I'm looking for gold prices to kind of hover. We have Friday's GDP number, which could be the beginning. Don't forget, we have G20 the week after that, with U.S. elections and FOMC all the way down to the first week of November. This is Todd Colvin coming to you from the floor of the CME Group.